Netflix. Last night, they reported an extremely disappointing subscriber number, and then they gave an even more discouraging outlook about the future. Not so hot quarter, ugly guidance. Sell. So, of course, the stock got hammered, down more than 7% today. But you know what? I'm taking the other side of the trade here. I think the people who dump Netflix are missing something big. You can't make up your mind about the stock until you read management's letter and to the shareholders, and then you've got to watch the video question and answer. Not read the transcript. Watch the video. Every quarter, CEO Reed Hastings picks a new inquisitor to handle the questions. This time it was Nidhi Gupta, and she's an analyst from Fidelity, real smart, who wasted no time grilling management about why their numbers came in so much weaker than expected. When most companies drop the ball, you have to expect a certain amount of obfuscation, excuse-making. Not Netflix. Netflix is run by some real straight shooters. Spencer Newman, the CFO, immediately stepped up and told us the last thing we wanted to hear. They're seeing a slowdown because of the huge pull forward in 2020 caused by COVID. Instant buzzkill. That meant, as the pandemic winds down, you could be stuck with one very overvalued stock. And that is why a lot of people sold. Going forward, obviously, things can't possibly be as good, right? But before you give up on Netflix, and I'm pretty much alone in the media about this one, but I don't care. Before you give up, let me ask you something. After so many years of outperformance, haven't these guys earned the benefit of your doubt? Newman immediately followed up by saying, the key is the business remains healthy. Our engagement, our viewing per household was up year over year in Q1. Our churn was down year over year, and we're still growing. Churn down. How can the product be bad if the churn's going down? To me, that says, please don't panic. Even as the pandemic's winding down here in the U.S., the rest of the world has been much slower to vaccinate. New infections are exploding. India looks like it's headed back into lockdown, and Netflix does a ton of business overseas. It is a global company, people. I think they'll find a way to jumpstart new signups with must-see content, whether they create it themselves or have licensed it from someone else. In other words, I am giving Netflix credit for something that doesn't exist yet, something that will make us feel compelled to subscribe despite all the competition from HBO or Disney Plus or NBC's Peacock, not to mention all the digital competition from YouTube, which they called out as being a real competitor. We know that COVID made it extremely difficult to film potential hits like Lupin, the terrific French thriller that I watched twice. I should have used the titles. I would have only had to watch it once. Now, what about the argument that Netflix growth is peaking now that it has 200 million subscribers? Well, I got to tell you, I believe Reed Hastings when he says, outside of China, I think paid television peaked at about 800 million households. So lots of room. And that was several years ago that it peaked. Lots of room to grow. I believe him. Why not? How have you done if you believe in this man? After the incredible performance this company's given us over the years, you got to remember that doubting Netflix has been a mistake every step of the way. They didn't get to be in the end. They were not the end in FANG for nothing. I created FANG, so that's my own hubris there. These companies are all moving targets. That's right. The companies that are in FANG never stop innovating.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.